Guys, you've heard me say in previous videos that I think layer twos are going to be one of the largest narratives to create wealth, to create millionaires in this bull cycle. So in this video, I'm going to be showing you my exact layer two investment strategy. And if you stick around to the end, I'm going to show you a 1000x investment opportunity within a layer two ecosystem. So before we get started, I do have to say none of this is financial advice. This is my own research, my own opinions, and it should be treated as such. Use this video as a starting point, but always do your own research. So in this video, we're going to talk about what a layer two is, what problems they're solving, what's being put in place so that layer twos can explode from a utility standpoint, as well as the layer twos that I'm investing in. And as promised, if you stick around to the end, I'm going to show you a layer two investment strategy that could yield you 1000x returns if played correctly. So without further ado, let's jump straight into the content, starting off with what is a layer two. So before we jump into what a layer two is, you have to know how a blockchain works. So any blockchain has three components. You have a consensus layer, and this is how the blockchain comes to consensus to say what's true. Bitcoin, that's proof of work. Ethereum, that's now proof of stake. You have a data layer, which stores all of the information from all of the blocks. And this is why you hear about shards that run along as parallel blockchains on side of the chain, so it can store the data without clogging up the mainnet. And then you have, which is what layer twos are designed to help with, execution, which is your computational finality. Right now, all three of those things are happening on the mainnet. And it's just like if you are flying a plane somewhere or driving a bus somewhere. There's only so many seats on each plane. So if it's only one plane flying from New York to San Francisco, those tickets are going to be extremely high because you have a large amount of people bidding on a small amount of seats. But if there were more planes, it would drop the price. It's the same exact thing with blockchains. No matter what transaction you're trying to do, whether if it's facilitate a borrowing and lending transaction, a swap on a decentralized exchange, minting an NFT, literally it doesn't matter. Blockchains are in the business of selling blocks, and each transactions are competing to get inside each block. And there's only a certain amount of block space, right? So this is why in bull markets, people start going to L1s like Solana and the Binance Smart Chain because Ethereum gets clogged because there's so many transactions that's trying to get into a block, and it makes gas fees extremely expensive. Insert layer twos to solve that problem. Layer twos are taking the execution and allowing them to happen on the layer two so that it can free up space on the layer one. Let's use Ethereum as an example, so that the gas fees can go down significantly. So how layer twos work is you do the transaction on the layer two, and that's why you hear optimistic and ZK rollups. They roll up all those transactions to the smallest data packet possible, and then they submit it to the layer one so they can have more space, like I said. But to give an analogy, it's like going to a bar. If you go to a bar, imagine how annoying it would be if you had to swipe your card every time you bought a drink. It would be annoying because you have to wait in line. You wouldn't be able to socialize as much, which is probably the reason you're there for. And it just wouldn't be an overall good experience. And you probably buy less things too. When you go to a bar, you open up a tab. And every time you buy a drink, buy someone else's drinks, buy food, whatever, you add it to your tab. When you're done, you close out your tab and you pay for all those transactions at once instead of keep having to swipe your card and create this long line. It's the same exact thing as layer twos. Layer twos are designed to free up space on the mainnet via computation. And I believe that most of the dApps are going to be built on layer twos. And the cool thing is when you submit it to L1, you still get the security benefits from the consensus mechanism. And then I've also spoke about the blockchain trilemma. You have decentralization, scalability, and security. Each blockchain is optimized for two of those things, and Ethereum is aiming to hit all three of those prongs so it can be scalable, decentralized, and secure. Okay, now let's talk about a few things that I believe are being put in place / happening that will allow layer twos to explode. The first thing is BlackRock's ETH ETF. I think they delayed it to May, so we'll get a decision in May. I think the market's going to start pricing that in. Keep in mind, BlackRock has filed over 500 applications. They've only been denied once. And we just had the Bitcoin ETF get approved. So I think it's a high likelihood for the ETH ETF to be approved. And if the ETH ETF gets approved, there's going to be other ETH ETFs by other custodians if there aren't already applications for them. I should have checked before making the video, but it's all good. If that happens, the custodians are going to have to buy up a large amount of ETH, just like they are with Bitcoin. Last time I checked, there was like 40 Bitcoin left on OTC markets. Every time there's a 10% dip, it gets bought up. So bulls are in charge right now. I think the same exact thing would happen with ETH, but I think even more so because ETH is a utility. It's not a store of value. Eventually, ETH will flip Bitcoin because utility trumps store value all day long. And this is why oil is worth more than all precious metals combined. They call Bitcoin digital gold and they call Ethereum digital oil. And the reason why is because it has all these different use cases, just like oil. Oil you can use in your car, in your hair, is used to pave roads, petroleum, like all kinds of things. Same with ETH. You have NFTs, you have DeFi, you have layer 2s, you have all these different things that isn't practical to build on Bitcoin. So if ETH ETF gets approved, people are going to make money from ETH. They're going to take some of those profits and start speculating on ETH altcoins. Most of the altcoins are built on ETH, and that includes the layer 2s that we're going to talk about in this video as well. I think those are the lowest hanging fruit because there's already a lot of building happening on layer 2s. Let's talk about the next thing that just happened that is also going to make layer 2s more efficient, which I think will lead to more investors investing into these layer 2s. And what we're going to be talking about is something called the Duncan upgrade. So it says here on CoinDesk, and this went live, I think, on March 13th. Ethereum's Duncan upgrade could mean near zero fees for layer 2 blockchains. And they're already cheap, right? And this is the first step towards enabling Ethereum's roll-up centric roadmap, which is their roadmap to take a modular approach, which means they're trying to optimize so that they're, like I said, scalable, decentralized, and secure without having to compromise for one. So if we read a little bit here, it says that it will allow the network to function as a proper database for L2 blockchains to store data more efficiently and cheap. And like I said in the beginning, it unveils an opportunity for near zero transaction fees for users of layer 2s, which could attract more users. So the Duncan upgrade is live. We're going into a bull market. We got the Bitcoin ETF. We got the halving a few weeks away or a month away. So now let's go into some more L2 data so I can keep drilling the point home as to why I think L2s are going to explode in the bull market. All right, guys, so here we are on L2beat.com, and you can see that the total value locked in layer 2s is 35 billion. And you can see this is exponential growth. This isn't linear growth. It's been growing exponentially, right? And the bull market hasn't even fully kicked off yet. And with the ETH ETF and the Duncan upgrade, I expect this to continue to rise. And if you think about it, last cycle, L1s was a major narrative. Like you saw projects like Solana, Cardano, Ethereum, Avalanche, you name it. L1s were pumping. I think it's L2's turn because most of the apps, like I said, are being built on L2s. So the same thing that happened with layer 1s, I think it's going to happen with layer 2s. All right, so now that we cover that, let's hop into the first layer 2 investment, and that is Arbitrum. You can see that the total value locked is 14.7 billion. They did an airdrop. The TVL continued to increase. There's a lot of building happening on Arbitrum. And you can see here that the market cap is only 2.49 billion, pretty much 2.5 billion. I'm not going to dive super deep into the details of Arbitrum because I already made a video on how to turn a super small amount into a large amount, showing my exact take profit and yield farming strategy. Definitely give that a watch if you haven't already. My next investment is Optimism. You can see Optimism has an $8.2 billion TVL, pretty significantly behind. It's a significant gap between Arbitrum, but you have Coinbase building their base chain on Optimism. You have a lot of other building happening on Optimism as well. And just the fact that Coinbase chose to build on OP versus Arbitrum, even though there's a difference in the TVL, it still says a lot. We're still extremely early. And again, I'm not going to make a video going into the nitty gritty of Optimism because I already made a video showing how you can turn a small amount of money into a large amount of money investing into Optimism, showing my take profit and yield farming strategy. You can see here that the Optimism market cap is only 3.6 billion. I expect this to rise pretty significantly as we go into the bull market. My next layer 2 is Polygon. And again, I made a video on how to turn a small amount into a large amount investing into Polygon as well, showing my yield farming and take profit strategy. Polygon has some of the best partnerships in crypto. They've been around for a long time. And again, a lot of building happening on Polygon. They also built out their Polygon ZK EVM. So I'm really bullish on Polygon. The market cap's only $10 billion. I expect that to rise significantly as we go into the bull market as well. All right, as promised, for all of you rascals who stuck around to the end, let's get into that 1000x L2 opportunity. And that L2 opportunity is the Blast ecosystem. So if we go back to L2 beat, you can see that Blast, and this is a fairly new L2, it has a higher TVL than Base, a ZK Sync, Mantle, Linea, Immutable, Polygon ZK EVM, 2.65 billion, just right ahead Manta and Starknet. So Blast is doing something cool. I'm at their website, blast.io, and you get a native yield just from holding tokens on there. And I'm gonna explain how that works. So they're backed by Paradigm. And the cool thing about that is Paradigm backed Uniswap, DYDX, a lot of projects that did airdrops. So I wouldn't be surprised if there was a Blast airdrop from using this L2. So that's another thing to think about. So it says here, Blast is the first L2 that incorporates native yield, right? So it says the Blast yield comes from ETH staking and RWA protocols. The yield from these decentralized protocols is passed back to Blast users automatically, almost like a treasury bond on chain, or like you have a savings account and you just get an APY. So this is how it works. It's auto rebasing. Users transact in ETH. dApps are built around ETH. So let's talk about how this works. They're essentially giving you a risk-free rate from L2. In the TradFi world, the risk-free rate is government bonds, because you know the US government isn't gonna default, most likely. And the risk-free rate for crypto is getting a yield from the staking on the ETH 2.0 beacon chain. So let's go over how this works. So I said the risk-free rate is basically ETH 2.0 staking. So when you bridge over to Blast, let's say you bridge some USDC from ETH over to Blast. And I'm gonna show you how to buy what I'm recommending here, as well as how to bridge over to the Blast ecosystem. But let's say you're bridging some USDC from ETH. Instead of you just bridging it and you automatically get it on the layer 2, you bridge it, the protocol will buy some ETH, stake it on Lido, they will give you your BUSDC, and now since they bought ETH and staked on Lido, now you're getting that APY automatically to your USDC position without having to do anything. To be honest, I don't know why another layer 2 hasn't thought about this yet, but I think it's pretty genius, and I think a lot of people are gonna start copying them. So now I just wanna talk about the founder a little bit. So this is the founder, his name is Pac-Man. This guy has Web 2 experience, business experience, as well as Web 3 business experience, which is really, really good, right? So this guy dropped out of high school at 17 to attend Y Combinator, which is the largest startup incubator in the United States, probably even the world, I'm pretty sure. The good thing about this is that he's public. You have a lot of projects where the founders are anonymous. When they're public like this, it's a higher chance that they're not gonna rug, and they're just held more accountable if something goes wrong. So the first thing, this guy started a company called Namebase, which is like a domain company. It was acquired by Namebase. Namebase is the largest domain company in the world. They acquired this kid's company when he was 17, 18, 19 years old or something like that. Then he started the Blur exchange, and I'm looking at alt volume. You can see that they're number 2 behind OpenSea, right? There's a big gap in terms of volume and sales, but they started much later. So he started the domain company, then he started Blur, and now he's starting this Blast layer 2. I wouldn't be surprised if it does really well. Even if it doesn't do well long term, I'm a firm believer that it'll definitely do well inside of this bull cycle. And there isn't a Blast token yet, but as the TVL starts to increase, people are gonna speculate on projects there, and that is the opportunity. So if you go on DeFi Llama, I don't know why it shows only 1 billion in TVL locked here, but one of the projects that I'm recommending is Orbit Protocol. So they're a borrowing and lending platform, kind of like Aave. You can see they already have a TVL of 427 million. And borrowing and lending platforms and decentralized exchanges usually do really, really well when an ecosystem is fresh, because those are the protocols that people are going to use first. They have obvious utility, they're proven, right? You saw how Aave and Compound and Maker did during DeFi summer. We're going to have a L2 summer. And I think as people continue to bridge over to Blast, they're gonna buy these protocols. Guys, if you wanna get access to my buy and sell calls before they hit the internet, click the link in the description, book a free strategy session with one of our team members. We also have a course that shows you how to print money via yield farming and generate passive income on high quality blue chip assets. There are other Blast ecosystem tokens that I've already called out in my group that I'm just not going to make YouTube videos on. So if you want to get access to my buy and sell calls with potential 100x, 500x, 1000x opportunities that me and my team are doing research on all day, book a free strategy session and we'll see if our program is a good fit for you. Now, let me show you how to buy Orbit Protocol. All right, so this is the website, pretty simple, kind of just like ARB and Compound. I'll leave it to you guys to kind of go through this. This is a short-term play. I'm not holding this long-term. I always like to get a 3x, and then after I get a 3x, I take out my principal plus 50%. So I'm in a risk-free trade, and I already got some profits. So to bridge over, you just type in blast.io/bridge, and you have to bridge from Ethereum mainnet. It is compatible with MetaMask, and it's going to prompt you to connect to Blast first. You click yes, and then you just bridge over your ETH, right? After you have ETH on the Blast network, I use the Thruster decentralized exchange, app.thruster.finance, and then you can swap ETH for Orbit. As you can see, it's right here. So guys, I hope you got value from this video. This is the end. If you did, I ask you consider subscribing, drop a like, drop a comment, and like I said, if you want to be a part of an elite DeFi community of people who are passionate about crypto and investing, period, click the link in the description, book a free strategy session. We love to hear from you. We love to work with you. But other than that, I thank you so much for tuning in. I love every single one of you watching, and I'll see you in the next video. Take care and trade safe.